If I had to start investing all over again with zero experience, limited money, and no idea where to begin, these are the only three ETFs I've put my money into, nothing else. Because they are simple, they are powerful, and they've helped millions of people quietly build wealth in the background. Without stress, without trading, and without staring at stock charts all day. If you ever felt like investing is confusing, risky, just for rich people, this video will change the way you think about money forever. I'm going to break down what ETFs are, why they are perfect for beginners, and if you stick around till the end, I'll even show you a couple of bonus ETFs you might want to add to your watch list. Let's get into it. The smartest, simplest path to build wealth starts right here. So before I tell you which ETFs I'd personally invest in, let's break down what an ETF actually is. ETF stands for Exchange Traded Funds. Think of it like this. Imagine a basket. Inside that basket, there are dozens, sometimes hundreds of different stocks or bonds. When you invest in one single ETF, you're basically buying a tiny piece of every company inside that basket all in one go. For example, instead of buying just one share of Apple or Google or Microsoft, an ETF might give you a small slice of all three, plus Amazon, Tesla, and 495 other companies in just one investment. So, you get instant diversification even with a small amount of money. And here's the best part. ETFs trade just like other regular stocks. You can buy or sell them anytime during market hours. They usually have very low fees, way lower than mutual funds. And most importantly, they are passive, meaning you don't have to constantly research or time the market. It's basically the set it and forget it way to invest. Now, not all ETFs are same. Some follow the overall market, some focus on specific sectors like tech, healthcare, or real estate, and others even track bonds or international stocks. But in this video, I'll focus on three most powerful ETFs that I believe are perfect for beginners. Simple, safe, and strong enough to help you build long-term wealth. Alright, let's start with the first ETF I'd invest in as a beginner. And honestly, if I could only choose one ETF to hold forever, it would probably be this VOO, the Vanguard S&P 500 ETF. Now let me explain why this ETF is a core building block for long-term wealth. So what is VOO? VOO tracks the S&P 500 index, which is basically a list of the top 500 biggest, most valuable companies in America. I'm talking about giants like Apple, Microsoft, Amazon, Google, Tesla, or Nvidia, and hundreds more. By investing in just one share of VOO, you're buying into all 500 companies at once. So instead of guessing which stock will do the best, you're saying, let me own the whole top 500 and ride the growth of the entire US economy. So why VOO so powerful for beginners? Let me give you three reasons. Diversification without the headache. You don't have to pick individual winners. You're automatically diversified across all sectors: tech, healthcare, finance, energy, you name it. That means if one company crashes, your money isn't wiped out. You've got hundreds of others balancing it out. Strong long-term performance. Historically, the S&P 500 has returned around 8 to 10% per year over the long term, even through recessions and market crashes. That's enough to double your money every 7 to 9 years. thanks to compound growth and ultra low fees. VOO has one of the lowest expense ratios in the market, just 0.03%. To put that in perspective, if you invested $10,000 into VOO, your yearly fee would be just $3. So, how to use VOO as a beginner? VOO is perfect if you want to start small, set it and forget it, avoid stress and market news, and you want to build serious wealth over 10, 20 or 30 years. It's the ETF Warren Buffett himself recommends for most people. You can buy it through any brokerage like Robinhood, Fidelity, or Vanguard and invest as little or as much as you want, even with fractional shares. So if you're just starting out, VOO is your foundation. Now, let's move to ETF number 2. It's a little different, and it's perfect for boosting your income passively. This one is a favorite for people who want cash flow, not just long-term growth. It's called SCHD, which stands for Schwab US Dividend Equity ETF. And here's why it's so powerful, especially if you like the idea of getting paid just for holding an ETF. So, Schwab invests in a group of high-quality US companies that constantly pay strong, reliable dividends. Think of companies like PepsiCo, Coca-Cola, Verizon, or Pfizer. These are cash-rich businesses that reward their shareholders by paying them a portion of profits, usually every 3 months. So instead of just hoping your investments grow in value, you are collecting money while you wait. It's like owning a rental property, but without the tenants or repairs. So, why I love Schwab? Let me break down why Schwab is great for beginners. So, consistent income. As of now, Schwab pays a dividend yield of around 3.5 to 4%. So if you invest $10,000, you earn roughly $350 to $400 per year just in dividend payments. High quality companies only, so Schwab doesn't just pick random dividend stocks. It uses a strict screening process to select companies. That means it's not chasing risky companies with high yields. It's focused on safe and stable players. Like VOO, Schwab also has a very low expense ratio of just 0.06%. You're not overpaying for performance, and historically Schwab has outperformed many other dividend ETFs. So, how to use Schwab as a beginner? If you want passive income or lower risk and steady cash flow and a dividend focused strategy, Schwab is a fantastic option. You can pair it with something like VOO for growth plus income, or go heavier on Schwab if you're planning for early retirement or financial independence. And remember, you can always reinvest dividends to buy more shares, compounding your wealth even faster. So, I want to pause here for a moment. If you want to increase your income and build a real YouTube channel, I put together a free training program that walks you through the process step by step. You learn how to find topics that get views, how to grow without showing your face, and how to turn your channel into a steady source of income. You can watch it right after this video. It gives you the tools you need to move faster and avoid mistakes that slow most beginners down. It is simple to follow and designed for new creators who want results. The link is in the description or at the end of this video. Okay, let's get into next ETF. So alright, the third and final ETF on the list is for those who want growth, and I mean serious long-term growth. It's called QQQ, and it tracks the Nasdaq 100 index. Now don't let the name scare you. This is one of the most powerful and popular ETF in the world, and for a good reason. So, what is inside QQQ? QQQ holds the top 100 non-financial companies listed on the Nasdaq exchange. And that means one thing: you're investing in innovation. Some of the names inside QQQ are Apple, Microsoft, Amazon, Nvidia, Facebook, Google, or Tesla. These are the biggest tech giants, and many of them are still growing like startups. So why beginners should consider QQQ? For massive growth potential, tech is shaping the future. AI, cloud computing, e-commerce, electrical vehicles, cybersecurity. QQQ gives you exposure to all of that in one single ETF. Strong historical returns. Over the last 10 years, QQQ has consistently outperformed the S&P 500. While the S&P 500 gives solid returns, QQQ has crushed it in bull markets thanks to its tech-heavy exposure and diversified tech exposure. A lot of beginners make the mistake of putting all their money into just one tech stock, like Apple or Tesla. But what if that company struggles? QQQ solves that by giving you instant diversification across hundreds of the strongest tech-driven companies. So, how I'd use QQQ as a beginner? So, if I were starting from scratch, I'd use QQQ as my growth engine, pair it with VOO for stability, Schwab for income, and QQQ for aggressive long-term growth. It's a perfect to cover almost every angle of a strong beginner portfolio. Now, before we wrap up, I've got a few bonus ETFs to quickly mention that are also worth your attention. So, number one is VTI, Vanguard Total Stock Market ETF. If you want to own entire US stock market, not just the S&P 500, then VTI is the best bet. It holds over 4,000 companies, from massive giants like Apple and Microsoft to tiny small cap stocks. So you are not just betting on the big boys, you're investing in the entire American economy. So number two is VXUS, Vanguard Total International Stock. It gives you exposure to non-US stocks from Europe, Asia, and emerging markets. While the US is strong, adding international exposure can help reduce risk and tap in the global growth opportunities. So JP Morgan Equity Premium Income ETF. So it uses a strategy called covered calls to generate consistent monthly income, which makes it perfect for people who want cash flow, like retirees or conservative investors. While the growth may be slower than QQQ or VOO, the monthly payouts make it very attractive. So, alright, let's quickly recap the three ETFs I invest in as a beginner. So number one is VOO for broad US market growth, and Schwab for steady dividend income, and QQQ for tech-driven growth. To start investing today, I also added some links below, trusted partners, where you can open an account and start buying ETFs like the ones I've mentioned. These are my personal affiliate links, which means you'd support my channel at no extra cost while getting access to reliable platforms. If you want to build multiple income streams, especially online, all the links are in the description.